All right, ladies and gentlemen, I hope you had a wonderful day. It was another exciting day in the market. There was a ton of headlines by the time the bell rang. But tomorrow is the main event. We have Nvda earnings are getting the Fed minutes. I even think there's a bond auction and a couple of other things. But volatility-wise, this is the event everybody is waiting for. And to start off the video, you guys know the vibes, man. I need the likes, the thumbs up, all that good stuff. But I want to give you what you're looking for with Nvda. And here is the preview coming into tomorrow. So I've highlighted here in red. These are usually the main things you want to be looking for. Yes, it's going to be one thing about the report tomorrow and what they come out reporting, but then that guidance for next quarter, that has been the big driver. You should remember this number, 26.62 billion. If they guide higher than that number by a lot, it's going to be a good earnings report. If any of the next quarter guidance comes in lower, even if they kill it on this quarter, the one they're reporting tomorrow, it may not be that good. So you could see here the near-term options as of today for Nvda. They are implying, can you guys see? I don't know if the banner's in the way. Yeah, you get most of it, but they are implying 9.4% move. We will double check this tomorrow right before it happens. In the last 4 quarters, the last earnings, gain of 16, loss of 2, break even, and then gain of 24%. Revenue has beaten 19 of the last 20 quarters with one in line, and EPS has beaten 19 of the last 20 quarters with forward quarter revenue, beating consensus 5 out of 20. So, Chad, here's your preview. Screenshot it, and to give you reference, when it says this number versus the guidance, this number is the average analyst estimate, and this is what the company put out. But this is all that matters tomorrow. Does the guidance number come in hotter? And then how does the market take it? But Chad, we have a lot more to talk about. I have a couple more keys, a little bit more of a breakdown, the plays that I made today, what we're looking at for tomorrow, and a couple of good questions from the chat and an economic lesson. So Chad, you already know, like the video, all that good stuff. And don't forget, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, as far as the keys, it was a little bit more exciting today because we did get some updates overseas. You got to hear a little bit out of Europe, and we're still waiting on some of that data. You even got Christopher Waller coming in a little bit more hawkish, and then China. We'll talk about that one in a little bit. They had a lot of headlines there, everything from an app release getting taken down, and then they blame software problems all the way down to AI stuff. But no matter what has happened here, we were talking about this since yesterday, and I'm sure you see it in the market. The chip stocks are going up. Everybody is talking about Nvda. That is going to be the main event. We will be getting the minutes, and most people aren't expecting anything to come from it. However, if we get any indication referencing the quantitative tightening, remember, we did get some changes on that within the last 1 or 2 months. Those would be the factors that could get us sparked up again, or if there's something meaningful to extrapolate. However, since the minutes are 30 days old at this point, and now we're 2 weeks ahead of some other data and getting into the next cycle of data and then a SCP, this shouldn't really move us too much. So maybe it adds a little bit. It'll definitely be the focus because Nvda is after the bell, but tomorrow should be straightforward, and the answer relies in the earnings. So watch out for that. But moving into the next key, it's like I was telling you up here, what we got overseas, there was a lot of news. We even heard from like Nvda canceling or AWS canceling chip orders. There was all these things, but the China news, I'm bringing this up because we were just talking about that rally, and this morning the news was interesting because it was the first sign of souring in the last few weeks. There was reports reports that the government buying has slowed down or wasn't as active, and they're still seeing huge declines in the Chinese economy. Alibaba said they are slashing prices on their AI services by 97%, and then it brought Baidu into a quote-unquote price war. We will be getting Pinduoduo, Temu. Their earnings will be tomorrow morning, so we'll see if that adds anything else. And then finally, it was like Tencent or NetEase. They came out with a game, and then within an hour, it got taken down. People are like, wait a minute, are they doing the crackdown again after they were trying to like get things recovered? And then they said it was a server issue. I don't know, man. But all in all, it was like all at once you got all of these negative updates. So factor that in here to the data, the chips as it relates to Nvda. Keep your eyes out for this because there is a lot of other moving pieces. But like I'm saying here, it should be very straightforward. And after these events with Nvda and all that, it's going to start cooling down or staying in this low volume coolness until I think like June 12th till we get the CPI. So that is key number 2. And the final thing, if it is going to be slow, you should watch what keeps advancing, not necessarily what is moving. We're watching a lot of moves, low liquidity, something gets up to the range and something happens, it starts moving outside of that, and you'll get wild movements, but pay attention to what keeps going up. Gold, silver, some of these commodities, they are making a lot of these moves, and it's kind of showing you there is another story that is developing. I believe even healthcare and pharma stocks, utilities, they've been going up more than your big tech or some of your other favorite plays, and this is important. So in the midst of low volume and a lot of random poppers here and there, just pay attention to what is making an advanced move or even what's pulling back like the bonds. But all in all, it should be straightforward. There's not much. I think we get to coast a little bit, but now let us get into the plays. So, right off the bat, I got a couple of different plays, and these ones, I don't know if I didn't put one of the plays that I made today. We'll talk about that when we get there, but play number 1, Eli Lilly, Novo, and Amgen. There was a lot of news in the GLP-1 Ozempic space today. There was reports that China is about to give the okay for some of these drugs. That would be huge for that international market. And then JP Morgan was talking about other GLP-1 names and some of the potential upside, but they made a pretty big move. And like I'm telling you, some pharma and healthcare, they have been advancing as of late. I would watch out for these 3 names, Eli Lilly and Novo. Those have been the leaders in this space. And then recently, remember Amgen, they just had a good trial there for one of these similar drugs. Not to mention the Vannies and the VKTXs of the world as well. But these are the main ones. We'll see if it develops into anything, but that is play number 1. Then coming into play number 2, we talked about this one today. I don't have a play on it, but Pinduoduo. I think this one will be a good one in the morning. Post earnings usually moves pretty big. I like the pre-earnings plays. We went over it. It was pricing in 9%. They've had multiple earnings where they've moved over 20%. So the options weren't that bad. Last time we hit a Pinduoduo, but I remember after the earnings, we didn't. It was like profitable for a little bit, quickly went red for like a day or two, and then proceeded to start going up again. So this one, I think post earnings is going to be the winner, and watch for what happens after the bell. Pre-market will do one move. I think at the cash open, options are going to be all over the place. And honestly, I think fade the first move. If it's up, I think it'll go down for the first 10 minutes to an hour, and then it'll pop back up. If it opens up down, I think it'll start going up a little bit and then probably sell off. Obviously, it depends on the report, but this thing, it just loves to trade like that. And I mean, it's one of these big leaders in the China space. So I do think they're up like 30% on the quarter. So they also got a little bit of juice there, but watch out for Pinduoduo. That should be a good one. We will be there in the morning. And then finally, play number 3, baby, Marvel. And I don't have a play on Nvda. I don't even have a play on this one. And that's why I'm saying I like this, because I was just talking about it the other day and it started to run up from the last watch list. So I'm going to look for it. I'm not going to force it, but I do think they kind of struggled, and then their earnings comes up in a little bit. I kind of tied them in with Nvda. They were part of the first rally. If they could start to move off of it, this could be one. But even if I'm wrong about this, I would quickly start watching either tomorrow after Nvda go see the winners and losers after their earnings. If it sparks a rally, I'm sure there's going to be a lot of sympathies, and then vice versa. If there is downside, watch if anybody wins off of that or if they drag anybody down with them. But Marvel, it's gone up on the list. We've seen it, and it's been performing good, so we will see where that one takes us. But those are the main plays as far as everything else today. I made a couple of plays. I actually closed out of the Ethereum, the blockchain one, or the Grayscale. We had that ETF yesterday. We made a move on it. Those 100 shares, even after top ticking, I got up like another $4 on that. I said, hey, let me take the profit on that one. And then since the MET had a little bit of cushion, the micro Ethereum futures, and I was already up on it, took profits on one, and I was like, okay, I'll hold that now, and then we could keep riding this with how it moves. So those were the first two plays, and then I don't know if this is sad or not. You tell me. I didn't pump it, though. That's why I'm telling you guys now. I grabbed 2.5 thousand shares of MTC. I think it was like $1,600 or $2,000, but this is my hype play. I haven't played any of these since, what's it called, came out. What was it? The MPW. We got those leaps. I put a couple $100. This one, I decided to go with shares, and I saw this one a while ago. It kind of went nuts, but my logic with MTC here, it's one of these sketchy China, Hong Kong IPO type beats. I seen this get pumped a little bit in the past, and I say pumped, I think all of these are a scam. Now, I'm getting in my game of, I'm putting my bullet, spinning the cylinder, and this one, why I liked it, simply, it was just at $10, had one of those big moves down, and let me give you this as a reminder, though. Like that one yesterday, CTNT, bro, it went up to $42, opened up at 15 or like 6, and then it went down to $1. So if anybody gets dragged into it, I'm thinking it may, like literally the day before, I had one of those big wicks down, and that's the only thing I liked about MTC. People were talking about it. I think big volume came in. It had the big sell-off. It was down 20% today, and I'm looking at it kind of like BNet. Again, this is all just liquidity. BNet gave up half of the gains yesterday, then popped. I either get lucky or not. If I'm wrong, it's $2,000 lost, and what I'm saying here is that I'm going to be very strict on this one about not holding it. I want to take it to like the week, maybe Friday. If it pops up tomorrow, 50%, 100%, 20, get a good profit. I'm going to sell out, walk away with it, and then we'll see. And then I'll be like, thank God I was able to dodge a bullet on though. But these are really, really hype plays. I think it's feeding your money to the fire or spinning the roulette wheel, if anything. So we've seen a lot of action go on. I've ignored a lot of it, and now I think this is going to be the one, but still keeping it small relative to everything else. But not a recommendation. You will lose money. Be careful, and literally, if it's up by the morning, I'm probably going to be out of it by the time you watch this watch list. If it's down, I'll probably still be in it, and then we'll see if it does play the game by Friday. But those were the main plays for today as far as everything else. Now, I love this one, baby. He said, Yabasha, how can we research and find the next Nvda stock? Maybe for the watch list. Well, I got you, man, and here's the deal. The trends, bruh. The trends are right in front of you, and sadly, like the next Nvidia, the next thing, dude, it has been right in front of our eyes, and we knew about it before everything. And that's not just me. That's not just Stock Market Live. I'm saying, like, bro, go as a whole. We've seen all of this right in front of us, and we had an opportunity to get Nvidia even when it was starting to go up. It was right in front of us. There was, people spent 6 months calling it a scam, or it was at a high valuation. In my case, I already missed out buying it on 80. I was not buying it at 160 or 200. Some people went for the sympathies like AMD, and they went better, and then some did good like Intel and then came down. But like, it was right in front of us, these trends, and think about it. Look at the stock price of Nvidia when you saw your first AI thumbnail, when you first used ChatGPT. Go look at Ozempic and Novo. What was it at? When I remember I told you, I was like, my mom told me about this one biotech thing, or when you started hearing about people getting Ozempic face and it was going viral for people losing all of this weight, and they're like, people pooping in their bed. That was the first negative rumor on it. You guys remember that was all early in all of these processes. Think about it. Celsius, you started seeing them in every single podcast, even the Jesus podcast. I was like, what's Celsius everywhere? It's usually right in front of us, man. So A lot of us have made the mistake of either ignoring it. I think my problem or what I've done is usually if it does get expensive and it's kind of there, I'm like, oh, wait, I'm cheap, Habibi. I am cheap, ya besha. It does not help all the time. Sometimes good deal Facebook. Sometimes I say, no, haram, why I buy there, but that's one big mistake. But another one is think about it, because if you try to use this, there was a lot of things a couple of years ago that were right in front of us, and some of those things have failed miserably, like Peloton or even Fubo and even DraftKings. They were able to come back to a degree, and that has to do with real organic demand. So what I'm saying is that a lot of people made the mistake of manufactured popularity, and that's why what you really want to look out for is things that are organically being adopted in society in mass. The next big thing, usually you see it and it's right there. I would argue let's see if the Apple Vision, I don't know if everybody is using the Apple Vision, but you've seen more people slowly get into VR. But compare that to the AI, the Nvidas, the Chat GPTs, and the NVOs and Ozempics. But what the next big thing is, we won't know, but chances are a trend is going to come by us. And the question is it going to stick with society? Is it manufactured popularity, or is it here today, gone tomorrow? And, well, that'll probably determine its investment or not. So you let me know, or maybe in the comment, what do you guys think is the next thing? But you're going to be hearing a lot of AI for a while now, unless we get something with rates and all of that. But great question. Shukran, Habibi. Question number 2. I really, really like this one because we talked about this on stream. Mark, baby. Mr. Presidential, he said, thoughts on finding some put credit spreads with the market working up most days. So whether it goes up or not, man, I just love this idea right now. The thing I'm liking about it is that you're not getting too big of movements, and you are in this low liquidity environment, but the premiums are really, really high, and there's all of these expectations, and there is no shortage of people willing to gamble on those and even pay a high price after the littlest event. So that's a good environment to start selling premium. The one thing that you got to keep in mind, though, right now, you are getting paid 5% doing nothing risk-free. So if you are going to go selling any premium, you have to factor this in. It's not off of what you're putting in, but what is the max risk? What is the reward? What sort of yield are we talking here? Because if you are going to be taking risk and it's not able to produce you a decent enough return, I do think short-term bonds can trump a lot of strategies out there. Now, that being said, the number one thing here with this premium, I think it's a good environment to start selling spreads as long as you do not widen the range. The risk with this low liquidity right now is that something hits the range and then gets a little bit crazier, and before you know it, what was supposed to be 0.3 can turn into something of 1% by an expiration and then quickly bounce up, but you still may have to pay for that. And the only way that hurts you is if you sell spreads with a wide range. So $2.50 apart, $5, $10 apart, depending on how much premium you're trying to collect, that will be the determinant. But if you keep those ranges tight, you collect premium and you're, playing as the house, 90% odds, I think this up and throughout the whole summer, it is going to be a strategy like always. So we have a lot of old tutorials. Go search Selling Premium. We have all those. If you're not familiar, I may want to do it. And I think, my problem is that I usually get tempted to widen the range. So if I am going to do it, y'all hold me to it. We got to keep them small. Small and tight ranges, that will be the best. So I like it. If you control the risk, you management, it is a good time to sell premium. And the only thing I'll say, don't sell the daily premium. At least sell 2 weeks out, get some time, because you get to benefit more off of the time, and I think it will be skewed heavily in your favor to collect that premium, and then the random volatile events, they won't hurt you as much, just in case the little liquidity pockets wake up and then die down again. So hopefully that helps. Excellent question. And now I think I got a little bit. I thought I wrote you guys a little thing. I didn't. It's time for the economic lessons, baby. So what I'm going to do, we're going to go over the conclusion of yesterday. You guys have started chapter 1, and we're setting in the basis today. We're going to be talking about the basis of international trade and how it's been set up through like trade agreements. And this is important because as we start chopping up the chapters and get all the way down, this is pretty much the foundation for how everything operates, from the currencies and a lot of this globalization we've been learning about. So I hope you're ready for all of it, but please don't let me waste any more time. Let's get into it. So don't forget, we got to go with the conclusion from yesterday. And this was those last couple videos we've been talking about. Conclusion: International Political Economy studies the political battle between the winners and losers of global economic exchange. It examines how this political competition shapes the evolution of the international trade and monetary systems, affects the ability of multinational corporations to conduct their operations, and influences the development strategies governments adopt. Thus, IPE suggests that it is hard to understand anything about the global economy without understanding how political competition unfolds. IPE scholars traditionally have studied the global economy through the lens of three schools of thought. Each school of thought offers a distinctive window on the global economy, and each emphasizes one aspect of global economic exchange: cooperation, competition between governments, and competition between labor and capital. As the central defining element of politics in the global economy, the book relies on the approach that emphasizes the interaction between societal interests and political institutions. Such an approach will enable us to develop models that provide insight into how the global economy generates winners and losers, how these groups compete to influence the policies that governments adopt, and how these policies that governments adopt affect the evolution of the global economy. So that's beautiful. That's beautiful. That is our conclusion. So now let us talk about the World Trade Organization and the World Trade System. Economic production has gone global during the last 20 years. Not so long ago, world trade involved almost exclusively the exchange of finished goods. Toyota, for instance, produced cars in Japanese factories and exported the vehicles to, say, the United States. Today, intermediate goods that are assembled together into finished goods, make up a growing proportion of trade. Toyota now sources the components for its autos from products throughout the world, and these components are shipped to factories in the United States and 15 other countries, where workers assemble them into cars and trucks sold to American consumers, as well as exported to more than 20 countries around the globe. Global production networks such as these, often called global value chains, are increasingly common in today's global economy. Consider Nutella, a cocoa hazelnut spread produced by the Italian Ferrero Rocher. Ferrero sources the cocoa they use from Nutella in Nigeria, and it draws its hazelnuts from Turkey. It sources its sugar from Brazil, while the vanillin comes from China and the palm oil comes from Malaysia. Ferrero transforms these various ingredients into its tasty spread in 9 factories located throughout North and South America, Europe, and Australia. The entire production network is managed from corporate headquarters in Alba, Italy. The fragmentation of production into these global networks, a development we look at more closely in Chapter 8, has been made possible by the dramatic liberalization of associated rapid growth of world trade flows. Global trade has grown in the last 70 years at an average rate of about 6% a year. As a result, annual world merchandise trade has risen from $84 billion in 1953 to $17 trillion in 2020. World Trade Organization 2021. Never before has international trade grown so rapidly for such a long period of time. Even more importantly, trade has consistently grown more rapidly than the world's economic output. Consequently, each year, a greater proportion of the goods and services produced in the world are created in one country and consumed in another. Indeed, globalization is a consequence of these differential growth rates. None of this has occurred spontaneously. Even though one could argue that the growth of world trade reflects the operation of global markets and the cost-reducing impact of telecommunication technology, all markets rest on political structures. This is certainly the case with the international trade. World trade has grown so rapidly over the last 70 years because of an international political structure, the World Trade Organization, WTO, and its predecessor, the General Agreement on Tariffs and Trade, GATT. If you're a memer, you probably think something else. Has supported, and encouraged such growth. Most political scientists who study the global economy believe that had governments never created this institutional framework after World War II, or had they offered a different one, world trade would not have been grown so rapidly. rapidly. Internationalization, therefore, has been brought about by the decisions governments have made about the rules and institutions that govern world trade. Because trade plays so important role in our lives, and because trade is made possible by the political institutions that structure trade relationships, understanding the political dynamics of the world trade system is vital. This chapter begins developing that knowledge. It provides a broad overview of the WTO's core components and then examines how the global distribution of power shapes the creation and evolution of international trade systems. It then explores some contemporary challenges to the WTO, focusing on the rise of developing countries as a powerful bloc within the organization and the rise of civil society groups as powerful critics of the organization from the outside. The chapter concludes by examining regional arrangements, RTAs considered by many the greatest current challenge to the WTO. So, that is our intro. I could stop it there, but I took 40 minutes live. Let's just get into it. You know what I'm saying? So, what is the World Trade Organization? Hopefully, though, you don't need my opinion on that one because, again, I think it was very straightforward outlining it. I mean, I do think opinion-wise, some of you could argue this is just like propaganda and what you're born and bred to believe, that the WTO and stuff. But think about it. Whatever you believe, most economists would agree with this and most political examiners. But here's the deal. It's the only thing we have. So that's the way I kind of view it when it's all said and done. I mean, there is no alternative. The fact is, all of trade does rest on political structures, and this is the only system that we have operated. Again, that's why I say, you know, for this whole lesson in the broader scope of what I hope you all learn is that, whoa, we're still living through like modern times, you know, and like some of the economic developments, it's still kind of early on. So that being said, let's get back into it. The WTO, located on the shore of beautiful Lac Léman in Geneva, Switzerland, is the hub of the international political system under which governments negotiate, enforce, and revise rules to govern their trade policies. Between 1947 and 1944, the GATT fulfilled the role now played by the WTO. In 1995, governments folded the GATT into newly established WTO, where it continues to provide many of the rules governing international trade relations. The rules at the center of the world trade system were thus established initially in 1947 and have been gradually revised, amended, and extended ever since. The WTO is small compared with other international organizations. Although 164 countries belong to the WTO, it has a staff of only about 623 people and a budget of $215 million as of early 2022. The World Bank, by contrast, has a staff of 10,000 people and an operating budget of close to $2.5 billion. At the center of the world trade system, the WTO provides a forum for trade negotiation, administers the trade agreements that governments conclude, and provides a mechanism through which governments can resolve trade disputes. As a political system, the WTO can be broken down into three distinct components: a set of principles and rules, an intergovernmental bargaining process, and a dispute settlement mechanism. Two core principles stand at the base of the WTO: market liberalism and non-discrimination. Market liberalism provides the economic rationale for the trade system. Market liberalism asserts that an open or liberal international trade system raises the world standard of living. Every country, no matter how poor or rich, enjoys a high standard of living. With trade, it can achieve with trade than it can achieve without trade. Moreover, the gains from trade are greatest for each country and for the world as a whole when goods can flow freely across national borders, unimpeded by government-imposed barriers. The claim that trade provides such gains to all countries is based on economic theory that we examine in detail in Chapter 3. For our purpose here, it is sufficient to recognize that this claim provides an economic logic upon which the WTO is based. Non-discrimination is the second core principle of the multilateral system. Non-discrimination ensures that each WTO member faces identical opportunities to trade with each other with other WTO members. This principle takes two specific forms within the WTO. The first form is called Most Favored Nation, MFN, prohibits governments from using trade policies to provide a special advantage to some countries and not to others. Most favored nation is found in Article 1 of GATT. It states any advantage, favor, privilege, or immunity granted by any contracting party to any product originating in or destined from any other country shall be accorded immediately and unconditionally to the like product originating in or destined for territories of all other contracting parties. Stripped of the legal terminology, MFN simply requires each WTO member to treat all WTO members the same. For example, the United States cannot apply lower tariffs to goods imported from Brazil, a WTO member, than it applies to goods imported from WTO members from other countries. If the United States reduces tariffs on goods imported from Brazil, it must extend these same tariff rates to all other WTO members. MFN thus assures that all countries have access to foreign markets on equal terms. WTO rules do allow some exceptions to MFN. The most important exception concerns RTAs. Governments are allowed to depart from MFNs if they join a free trade area or custom union. In the North American Free Trade Agreement, NAFTA, for example, goods produced in Mexico enter the United States duty-free, where the United States imposes tariffs on the same goods imported from other countries. In the European Union, EU, goods produced in France enter Germany with a lower tariff than goods presented or produced in the United States. A second exception is provided by the Generalized System of Preferences, GSP, enacted in the late 1960s. The GSP allows the advanced of industrialized countries to apply lower tariffs to imports from developing countries than they apply to the same goods coming from other advanced industrialized countries. These exceptions aside, MFN ensures that all countries trade on equal terms. National treatment is the second form of non-discrimination found in the WTO. National treatment prohibits governments from using taxes, regulations, and other domestic policies to provide an advantage to domestic firms at the expense of foreign firms. National treatment is found in Article 3 of the GATT, which states that products of the territory or I'm just going to skip it and let him explain it. In plainer English, national treatment requires governments to treat domestic and foreign versions of the same products, like products, identically once they enter the domestic market. For example, U.S. government cannot establish one fuel efficiency standard for foreign cars and another for domestic cars. If the U.S. government wants to advance the environmental goal, it must apply the same requirement to domestic and foreign auto producers. Together, MFN and national treatment ensure that firms in every country face the same market opportunities and barriers in the global economy. These two core principles are accompanied by hundreds of other rules. Since 1947, governments have concluded about 60 distinct agreements that together fill about 30,000 pages. These rules jointly provide the central legal structure for international trade. As a group, these rules constrain the policies that governments can use to control the flow of goods, services, and technology into and out of their national economies. Some of these rules are prescriptive, such as prohibition against government discrimination. Others are prescriptive, such as requirements for governments to protect intellectual property. Many of these rules state instances in which governments are allowed to protect the domestic industry temporarily and then delineate the conditions under which governments can and cannot evoke this safeguard. All rules entail obligations to other WTO members that constrain the ability of governments to regulate the interaction between the national and global economies. So, my only opinion on this, I hope you are learning and understanding, because I'm sure you may have heard most favored nation and GSPs and some of this, we listen to a lot of things. All of this stuff does come out. I think over the stream, you've definitely heard a lot of this stuff. So again, understand, but we're focusing now. It's one thing, like, think about it. As an economist, you're going to ignore all the politics, right? You're saying, rationality drives certain things, supply and demand, but hopefully you see we're kind of looking at the structure that made it possible for things to go forth. And just imagine, here's what a teacher would ask you, like, what would the world look like right now if we didn't have some of these rules? Like we said, like, maybe this is our only option and we have to talk as if, this is all we have. But, what would be something else? You let me know. But continuing along, All WTO rules are created by governments through intergovernmental bargaining. Intergovernmental bargaining is the WTO's primary decision-making process, and it involves negotiating agreements that directly liberalize trade and indirectly support that goal. To liberalize trade, governments must alter policies that restrict the cross-border flow of goods and services. Such policies include tariffs, which are taxes that the government imposes on foreign goods entering the country. They also include a wide range of non-tariff barriers, such as health and safety regulations, government purchasing practices, and many other government regulations. Intergovernmental bargaining focuses on negotiating agreements that reduce and eliminate these government-imposed barriers to market access. Continue along. Rather than bargain continuously, governments organize their negotiations in bargaining rounds, each with a definite starting date and a target date for conclusion. At the beginning of each round, governments meet the WTO Ministerial Conference, the highest level of the WTO decision-making. Meeting for 3 or 4 days, governments establish an agenda detailing the issues that will be the focus of negotiation and set a target date for the conclusion of the round. Once the Ministerial Conference has ended, lower-level national officials conduct detailed negotiations on the topics embodied in the agenda. Periodic stock-taking are held to reach interim agreements. Once negotiations have produced the outlines of a complete agreement, trade ministers meet at a final ministerial conference to conclude the round. National governments then ratify the agreement and implement it according to the agreed timetable. All 9 of these bargaining rounds have been concluded. These bargaining rounds are usually extended affairs. Although the earlier rounds were typically concluded relatively quickly, the trend over the last 30 years has been for multi-year rounds. Governments launched the Uruguay round, for example, in 1986, though they began discussing a new round in 1982 and concluded negotiations in December 1993. Governments launched the Doha round in 2001, which plans to conclude around late 2005, yet governments were unable to make much progress and essentially reached an agreement that brought the round to a close at the 2015 Nairobi Ministerial Conference. The growing length of bargaining rounds reflects the complexity of the issues at the center of negotiations and the growing diversity of interest among WTO member governments. My opinion, in short, it was a lot more effective back in the day. If it didn't take this long. Maybe we'll get to it eventually. There'll be a lesson on bureaucracy and red tape. That's always a good one. But where was I? The rules established by intergovernmental bargaining provides a framework of law for international trade relations. Participation in the WTO, therefore, requires governments to accept common rules that constrain their actions. By accepting these constraints, governments shift international trade relations from anarchic international environment in which might takes rights into rule-based system which governments have common rights and responsibilities. In this way, the multilateral trade system brings the rule of law into international trade relations. The WTO's dispute settlement mechanism ensures that governments comply with the rules they establish. Individual compliance with established rules is not guaranteed. Even though most governments comply with most of their WTO obligations most of the time, there are times when some don't. Moreover, if all governments believe they could disregard WTO rules with impunity, they would comply less often. The dispute settlement mechanism ensures compliance by helping governments resolve disputes and by authorized punishment in the event of non-compliance. The dispute settlement mechanism ensures compliance by providing an independent quasi-judicial tribunal. This tribunal investigates the facts and the relevant WTO rules whenever a dispute is initiated and then reaches a finding. A government found to be in violation is required to alter the offending policy or to compensate the country or countries that are harmed. We will examine the dispute settlement mechanism in greater detail in Chapter 3. We're almost done. The WTO, therefore, is an international political system that regulates national trade policies. It's based on rules that constrain what governments can do to restrict the flow of goods into the countries and to encourage the export of domestic goods to foreign markets. All of these rules have been created and can be amended through intergovernmental bargaining because compliance with all the rules cannot be taken for granted. Governments have established a dispute settlement mechanism to help ensure that members comply. By creating rules, establishing a decision-making process to extend and revise them, and enforcing compliance, governments have brought the rule of law into international trade relations. So I hope you guys enjoyed this for now, but like I'm saying, maybe the only gripe would be like, well, why is this the only thing? Like, it's again, we're WTO and then these nations, but like, I really want you guys to understand this, and I guess I'll leave you this chart or table. you could see the negotiations and when it started and how many countries are participating. But like, I really hope you guys see, like, yeah, I know we feel AI in modern times and all of that, but like, if you really think about it, I mean, if we are making big global shifts right now, this is still new from a system that was developed in 1947. So I guess what? In 20 years from now, it'll be 100 years, but you'll notice, like, look at the first 30 years, and then it slows down, and then, like, look at how it's, 10, 20 years apart now, it leaves us with where we're at. But, Chad, I don't want to take too much time. I hope you enjoyed it. We still got a lot more to cover, and God bless y'all for being with me, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, baby, fear no evil, baby. That's it. Something's bigger than all of it. Finger to the sky, baby. You know the vibes, but I love you, Chad. Drink that water. Stay hydrated. Stay healthy. Wake up and drive. Bring the energy, and welcome to the middle of the week. Shout out Cole Real Estate 2 and Horn.